Hey guys, it's Crossroads here. Today I wanted to do a quick breakdown of PayPal earnings. More than earnings, we'll talk about what went right and why the stock went up over 16% initially, and what went wrong, why it just persistently sold from that peak and kept selling as well. Some of the highlights, some of the concerns, and what I'm thinking as far as quarter four. So, as far as overall thoughts, this earnings was pretty much on the nose from what I was expecting. A couple of nice surprises and a couple where I wish it was maybe just slightly better. For the overall earnings of quarter three, I expected a triple beat like we had in quarter two. We got that. I expected there would be some top line revenue acceleration. We got that as well. I expected EPS would of course crush. They raised guidance. We got that as well. Didn't have quite as many new active users as I expected. Guidance was a little bit more cautious than I expected. A lot of that's due to the macro more so than PayPal issues. And overall, very good, solid earnings. But that was not the big mover. The big mover actually was instead relating to PayPal and OpenAI. I won't pull this up. You can read the headline itself. And this is a video that I'll probably make maybe in 2 or 3 days where I'll do a breakdown of the OpenAI and PayPal contract and agreement. And also the not one, not two, but 3 other partnerships that they announced yesterday. I almost made a video. I'm like, I'll wait until after earnings. Some are better than others. MasterCard one's like, it's okay, I guess. MasterCard's great, but that partnership. The OpenAI one is amazing. And it's the reason why that stock just ran immediately up to almost $80 a share, actually a little bit above 80. It was not because of earnings. You look at the timing of that. Doesn't mean that earnings is bad, but what the market is really wanting out of earnings, it did not really get. And that's why I was looking at this quarter as a good, solid quarter that I wasn't expecting anything in terms of price momentum as well. So let's take a look here. Here are the third quarter earnings, and let's scroll down a little bit. They always put, a lot of details here. And I love this slide, by the way, of how much stronger they are as a business. Chris talked about this too in the earnings call, of the momentum that they have, that they're in a very strong position. And these were a very strong earnings. It was easier for people to see that when we were up 16% than right now, but that got a lot of people's attention, and they're doing quite well. The growth stuff doesn't matter too much here. What I want to focus on is a couple of things. So this is one of those continued slides which I'm very appreciative of. We're in quarter three right here. Technically, we're in quarter four now. They haven't reported this, but we're seeing Braintree, that's the payment service provider, accelerate to 6% dollar neutral, which means it's actually contributing to growth again. Last quarter, it was 2%. They were expecting nothing. It was actually negative in the first quarter, or maybe it was 1%. That was a couple of quarters ago. It was basically nothing versus previously been growing rapidly, just not translating to the bottom line. So this was a part of the equation that I knew would start to shift in quarter three. They guided for this as well. We'll see more shift in quarter four, actually quite a bit more. One of the things that the market is wanting, and that's missing right now at PayPal, is double-digit top-line revenue growth. Instead, they did not post that. It was acceleration. It was a beat as well. Here's total payment volume rather than revenue at 8% or 7% dollar neutral. And the revenue was a little under that. That's interesting. 7% and then 6% dollar neutral. Again, they were actually aided for once by having a little bit weaker US dollar. Usually that's not the case. They're taking some of the hedging off just because of this. So we're going to see this, I think, as a continued trend into next quarter as well. Now, the reason why revenue is a little bit slower than the total payment volume is they noted, and this is one of the reasons why the stock actually began falling during the earnings call. The CFO, Jamie Miller, she's great. She's very credible at what she does. I think she's, awesome. She doesn't do well in just reading speeches and having like some sort of optimistic tone. It always sounds really bearish. Now, when she's talking and engaging with people, that's not the case at all. And she sounds very upbeat. So as she's reading and as she's going through, she also talked about basically with October and also with this last quarter that they were seeing that volumes, the TPV, total payment volume, was going up, but the amount was going down, and they were seeing some stress on the consumer level as well. Now, I don't think that's endemic, widespread, anything like that. It's not a really concern with holiday spending yet, but it could be. And that's why they also offered guidance a little bit more cautiously, partly because we still haven't had that talk with China yet. Things look favorable, but you never know. And if the United States government remains shut down, that's going to impact a lot of people, including some of those that can least afford to be impacted, that translates to probably a softer, it should anyway, revenue as far as a holiday spend. And that's not good for anybody, especially for PayPal as well. So they want to just be a little bit cautious here. But that caution basically was throwing cold water on a heated stock. And as a result, it dipped pretty hard at that point. And algos may have taken that over. Now, the other reason, and I think that this is, that was fine. It is what it is. It's done. By the way, one highlight: adjusted free cash flow, which they adjust because of the timing benefits of the buy now, pay later. Man, look at that. They announced, by the way, a dividend, 14-cent dividend. They're tying it to about 10% of their EPS each quarter. So as EPS continues to climb, that will continue to climb too. That's really, I think, a little bit early for the dividend, but it's fine. I mean, I don't hate them paying me money. And they're continuing the buyback program as well, very aggressively. They showed a lot of signals that free cash flow, of course, we know they're going to post an even better number here in the next quarter, or at least a very similar number, which is amazing. It'll be the two biggest free cash flow quarters that they've ever had consecutively, ever in their history. Alex Chris is certainly translating this well to the bottom line. Regardless, here is where we see a little bit of softness. One is active accounts. Year-over-year growth is 1%. Now, they do have a footnote here. They've completed a transaction within the past 12 months. They've talked about, and I agree with this, that the monthly active is a more important number. We're seeing a 2% growth. Last quarter, they saw, by the way, 2%, I believe, on the year-over-year growth. I was expecting maybe a 2.5%, so this is lighter than I expected. But Venmo is going to be one of those big contributors. They're positioned very well to grow at a lot faster rate than this, but this is a lot of large numbers when you're looking at 438 million. I don't think the market was too concerned with that. It's something that I observed and I noticed. Margins were what they were. They're fine. This right here, though, this was the black mark on the quarter. It shouldn't shock anybody. It shouldn't be terribly surprising at all. Branded checkout is when you see the PayPal button, you click on it, boom, PayPal. There's a little bit more to it, but that's in essence what that is. That is growing at a rate that's less than e-commerce. Alex Chris talked about it in the earnings call itself. He said, hey, this isn't satisfactory. We will improve. We will increase it. And there are things that are in motion. He enumerated a number of those things. Most of them are known. And he also didn't mention some things which are also going to impact positively branded checkout as well. But some of this was also macro trends too. And they mentioned it right here, despite mixed global macro trends. One of those was the de minimis ending, not just in the U.S.-China corridor, but also elsewhere. That it was a tariff law that basically under $800, if you were shipping something from one country to the United States, no tariff at all. Now we've removed that as a government, and as a result, there's just a little bit less traffic as well. Not like super bearish long term or anything like that. It's a slight drag. There were some issues in Germany that did cause very temporary, but Germany is an important market. A little bit of drag there too. So I would actually expect branded checkout to actually start to improve a little bit in quarter four, actually a good bit in quarter four. Like we're not going to see double digit, but 6 or 7%. You need to see this going up to about where e-commerce is growing on a global level, or at least in the United States. Branded experiences, which is branded plus a few things, including Venmo checkout, which has the same take rate. That's not a bad measure to look at. You can see that this has increased. But yeah, this right here, look at that analyst interview that I did with Dan Dolev. He's right. I've seen articles actually last week, that were fairly bearish on PayPal by analysts, just noting branded checkout growth. There were some people that came out today that basically reiterated price targets or analysts, and it all revolved around branded checkout growth. And the other thing too is they're like, hey, PayPal did a lot of things. They're doing amazing this year, and we think it's just a one-off and a fluke. Also saw that too. Worded much more professionally. They're dead wrong on Alex Chris. They're wrong on branded as well. And this is an important part of the business. So I'll give credit to analysts. They're right that this is important, but it's not the most important branding experience number. There likely is also a bit more revenue. A lot of good stuff in this earnings. A lot of good stuff. Some surprises again with dividends. Overall, I'm very pleased. By the way, here is the guidance. Guidance was raised a little bit, and you can actually go up in the slide deck and actually see where they've changed that and reiterated it a little bit more. But yeah, this is very nice compared to where they were in July. We can see, if you look at GAAP EPS, non-GAAP EPS, all quite a bit higher. Non-GAAP, non-transaction operating expenses, They're growing this because I see an opportunity. There will be some contra revenue, and that's also one of the reasons why, if you're looking at their guidance, they don't guide for revenue here, but it is part of transaction margin dollar. In essence, they're like, hey, we have some products that if now we're willing to give some promotions towards growth. They've always done a little bit of that, but they're seeing some opportunities beyond what they're doing currently right now. One of those is buy now, pay later in this next quarter, which is going to be accelerant on the top line for revenue. Won't translate to the bottom line in Q4, but it will actually bring new users into the ecosystem. Alex Chris talked about that and broke it down in the earnings call as well. But yeah, there's a lot going right. The ship has turned. If you think of it as an ocean liner, those do not turn on a dime. They take a while to really turn. We're past that turn now. And what we're really at is a reacceleration in the proper direction under very credible leadership as well. So this is a long-term position for me. I didn't see anything this quarter that I'm like, oh man, this is terrible. I need to get out. I've done that with companies before. I'm not afraid to say, hey, I'm wrong. The thesis is broken and I'm out. I'm also not afraid to double down if it's time. For myself, for PayPal, I'm not buying here. I'm not selling. It's already a large position for me. And I'm glad that it's up, 5-6%, including after hours. So yeah, good. But Q4, again, I think is going to be that quarter. I will save that and the reason why for another time. But a lot of it revolves around new products that are bearing fruit and that are really scaling in Q4, and some of those promotions that I alluded to as well with PayPal, in addition to full year guidance. There's a lot more to it. It's probably a 20-minute video, maybe a few weeks out or maybe past earnings. But anyway, let me know what you guys thought in the comments. I had the privilege to not do this call live. I'll do Q4 live, by the way, for PayPal. But I went through it on quarter, listened to the earnings call. Don't not just read the words, but listen, because tone is important there. And was very impressed. So if you guys are PayPal shareholders, let me know. Were you looking for the exit and saying, hey, $80, I am out. It's going to go back lower. If so, you were right. It went back lower. Maybe you bought back in. Curious what you see. I also saw a lot of first-time buyers of PayPal as well that were very excited with the OpenAI partnership and also the earnings and the valuation as well. Anyway, thank you guys for watching, commenting, and subscribing. Until next time, happy investing.